We are doing the sum of Jan Feb 2023 IAL accounting, and it is a sum that is related to marginal costing. Are you with me?
Yeah.
Before I'm going to anything, I am trying to see what have they asked me to calculate. So they have asked me to calculate the break-even point in units and break-even point in sales value. Can you give me the formula for break-even point?
Isn't it fixed cost by contribution?
It is fixed cost by contribution per unit. So if I want break-even point in units, it is fixed cost upon contribution per unit. And if I want the break-even point in sales revenue or in the pound value, it will be what?
What else?
Fixed costs, sorry, break-even point in sales revenue.
In sales revenue, that would be the same sales and fixed cost.
It would be fixed costs over the contribution to sales ratio.
Yeah, contribution to sales ratio
Over
is.
the contribution to sales ratio. Are you with me?
Yeah.
That means our entire target lies behind finding the fixed costs, correct?
Yes.
And finding the contribution per unit and contribution to sales ratio. Correct?
Yes.
Okay, fine. Let's see. Let's read the question. Before I read the question, I just want to crop this and get it over here. So for answering this part, break-even point in sales revenue and break-even point in dollar value, you need to put down this. You need the question. Correct?
Yeah.
Come on, read the question. Let's read the question together.
You want me to read it out?
Yeah.
Okay. Cherry Avocado PLC produces printers for computers. It's a statement of profit or loss.
Oh, I will read
And
it.
other. Okay.
We have the statement of profit or loss and we have the statement other comprehensive income. Other comprehensive income is revenue, direct cost and overheads. Okay. And you have the net profit for the year. Information is available. I want you to read it, but in a little slow speed.
Okay. Printers are sold for 95 pounds each. All production is sold. All direct costs vary directly with production.
So you
Production
have the selling
overheads.
price.
Yeah.
Correct. What do I need? Two things I need. What I need? One I need is the fixed cost.
Yes.
And one I need is the contribution per unit.
So
Third thing
the
I
fixed.
need is the contribution to sales ratio. Correct?
Yeah.
How do you get the contribution?
Yes, it's revenue minus sales minus variable cost.
Sales minus variable cost is contribution. Okay, fine. Come on, go ahead. Do I have the selling price?
Yes, 95 pounds each.
So you have the selling price is 95. Let's go ahead.
All direct costs vary directly with production.
Can you tell me what is the meaning of this?
All direct costs vary with directly. This the amount of this thing printers they make will affect the direct cost. Like the materials
Properly and try to analyze further.
cost vary directly with production. What does it mean?
Okay, direct costs is varying directly with production. When I say that the direct cost varies directly with production, that means if the production increases, your direct cost will also increase.
Yeah.
If the production,
That's what I.
the direct cost will also reduce. Okay, direct
Yeah.
cost is a variable cost, and variable cost always varies in proportion to production.
Yes.
Okay, fine. What else they've given to you?
Delivery overheads are split into fixed costs of 300,000.
Production
Our production overheads include a fixed element of 750,000 pounds.
So you have
That's fixed
production
cost.
overheads. What is your production overheads?
750,000, and it's fixed.
So production overheads is 1125.
Huh?
A 1,125,000, right?
The saying it's 750,000 pounds, miss.
Read over here properly, darling.
Oh, okay. That, yeah, the overheads 1,125,000.
Okay. From this production overheads, what is the fixed element?
750,000. So the
So
remaining would
the
be
fixed
variable element.
element is 750. What is
Yeah.
the variable element?
So I have to subtract.
Find out, please, for me.
Yeah. 375,000.
375,000.
Yeah.
So in production overheads, you have the fixed element as 750 and the variable element as 375. Yeah?
Yeah. Yeah.
Okay, read ahead.
Delivery overheads are split into fixed cost of 300,000 pounds and variable cost of 225,000 pounds.
Yeah, so can you please break it up for me?
This in the overhead section, the delivery is 525. Now 300 goes for fixed costs, and then now the remaining 225 go for the variable cost.
Remaining 225 goes for the variable cost. Okay.
And then all administration overheads are regarded as fixed costs. So all admin, so the whole 825,000 is considered fixed cost.
So you need to do the markings. When you're solving, you need to
Yeah.
do the markings. Okay.
Yes.
Hmm. Read ahead.
Sales staff receive Sales staff receive a sales commission of £4 for every printer sold. All of the sales over.
What does
Sales
this
staff,
mean? Read clearly. I'm recording it so that it's help for others.
yeah. Sales staff receive a sales commission of £4 for every printer sold. All other sales overheads are fixed. So the sales overheads is fixed cost.
So there is sales overhead. One part is
Yes.
variable in the sales overhead. What
No.
is variable? It will be £4 for every unit sold.
Yeah.
It will be £4 for every unit sold, and I do not know the units sold. Do I know the units sold?
You do not know the unit sold, but you do know the cost, and you can just subtract out the revenue. I mean, divide it with the revenue.
No, I know my total revenue, right?
Yeah.
I know my total revenue is how much?
7,105,000.
So it is 7125. Okay.
Yeah.
And 7,125,000. I
Yes. So,
know
miss,
my selling
your
price per unit.
yes. You just divide that.
So I know my selling price per unit is £95.
Yes.
Okay. So if I want to find my number of units sold, can I find out?
Yes.
How?
Miss, you divide the revenue with the the cost of each. I mean,
That
the
will become
selling
how
price
much?
of each. That would be 75,000 units.
So your number of units sold is 75,000. Why did I
Yeah.
need this number of units sold?
To calculate the commission for the sales stuff.
So I know that what is the variable sales overheads and what is the fixed sales overheads, right? Yeah.
What, miss?
So that I find out what is the variable fixed overheads, sales
Yes.
overheads, and what is the fixed sales overhead, correct?
Yes.
Okay. So what is the variable sales overhead?
300,000.
How?
Miss 75 units, then the £4 commission we just multiply it together.
75,000 into 4.
Yes.
So it
That's gonna
becomes
give
how
you
much?
300,000.
300. So my variable part of the sales is how much?
300.
And what is the fixed?
900. So it'll be 600?
The fixed is 600. Why
Yeah.
I'm doing this bifurcation of fixed and variable?
Must define the contribution, right?
I want to find out what?
The break-even point.
I want to find the break-even point in dollar
And
value, and I want to find it out in which value?
unit
In units value. What is the formula for break-even point?
fixed cost divided by contribution per unit.
Fixed cost divided by contribution per unit. So if I want to find out in dollar value and sales value, and this is for 16 months.
Yeah.
So two things I need. I need the fixed cost. I need the contribution per unit. To find the contribution per unit or total contribution, what do we do?
What?
To find
And
contribution, what do you do?
so the
Sales
whole
minus
sales
variable
minus
cost
variable cost
give
gets
you
into the
contribution.
contribution.
That means I need a bifurcation of my variable cost also. I need a bifurcation of my fixed cost also. Are you with me?
What is bifurcation?
I need to know what is my variable cost. I need to know what is my fixed cost.
Okay, spreading up your overheads. Okay,
I need
got
a
it.
spread. And why
Yeah,
do I need this spread is because I need the fixed cost to find out the break-even point. I need the variable cost to find out what?
contribution.
I need the variable cost to find out contribution. And I also had to find out the number of units sold, right?
75,000.
Okay, fine. So here I have this breakup of the variable cost and fixed cost. Can you see now?
Yeah.
Let's see. I have all my costs over here.
Yes.
Okay, I have all my costs over here. I need a
Yeah.
breakup of fixed cost and variable cost.
Yeah.
Direct costs vary directly with production. Means what?
Yes, the level of output changes with the
That means
level
it
of
is entirely
units
variable.
produced.
So
Yeah.
825 is variable, 1875 is variable, 225 is variable.
Yeah.
Okay. Overheads. We have the bifurcation of the fixed and variable. We just did it.
Yeah.
You need to show your workings very clearly. So the production overhead 750 was fixed and 375 was variable. Delivery 300 was fixed, 225 variable. Administration entire 825 is fixed. And for sales 600 is fixed and 300 is variable. So your total fixed cost is how much?
It would be 2,475,000.
2475 and variable cost is 3825.
Yeah.
Are you with me?
Yeah.
Okay, fine. Then I will write what I need. A part.
Huh?
What do I need?
For the same break-even point
Unit break-even point in
in
units.
units. Yeah.
How do you get that?
Let's just divide your the same
It's a
variable cost with
formula,
the
darling.
amount of units. Okay. The formula
Fixed
would be total
cost,
variable is what?
break-even
Contribution
point
or
in units. What is the formula?
break-even is fixed cost by contribution per unit.
Break-even is fixed cost divided by contribution per unit. What is your fixed cost?
Its fixed cost total is 2,475,000.
I don't know where you get these random figures from.
Huh?
What is the fixed cost?
The total fixed cost, right?
Amount.
Yeah, it's 2,475,000.
Okay. 2,475,000. What is the contribution per unit?
Uh, Contribution per unit, you'll have to divide your this time. I mean, first you subtract the revenue by this time, which will give you 3,300,000.
You give me a
You
formula.
just okay. Uh, Contribution divided by the total number of units,
I
the
want
number
the
of units sold.
contribution per unit.
Yeah, miss, here you take the contribution, you divide it with the
There is
number of units. So,
contribution. How do you get contribution?
miss, you subtract the sales with the variable cost. So
So
three million eight
contribution
hundred.
is sales minus variable cost.
Yeah.
What is sales?
Or 7 million.
7125.
One. Yeah.
What is the variable cost?
3,825,000.
So what is the contribution? Total contribution.
3,300,000.
Yeah,
Yeah. Then you
per
divide
unit.
that. Yeah. That's not per unit.
Hmm.
So to find per
Contribution per
unit,
unit will be
uh, you divide the 3 million with 75,000.
divided by the number of units sold.
Yes, that will come up to 44,
What is the number of units sold?
75,000.
So I will remove 3 zeros there and 3 zeros here.
Sure.
So
But
what is the
yeah,
contribution per unit?
44.
Yeah.
Yeah.
So break-even point in units will be
Uh, I have to divide that 2,000,000%.
so it will become 56,250 units.
Yeah.
Now this is your A part, A1. How about
This could you
A2? Yeah, 1 minute.
explain? So
Now A2. What is A2 asking?
calculate the break-even point for printers for the year and sales revenue.
Break-even point in sales revenue.
Yeah.
So you have the number of units.
Yeah.
So you can just multiply it with the selling price.
Yeah.
So what is the break-even point in units?
Break-even point in units was 44 per unit.
We just found out, right?
Yeah.
What is the selling price per unit?
95.
So what will be the break-even point in sales revenue? 5,343,750.
Yeah.
Okay. So I
Yeah.
have done this somewhere. We had to find out the number of units sold. Number of units sold we found out because we wanted the bifurcation of your variable sales overhead and the fixed sales overhead.
Yeah.
Then we found out break-even point in units, break-even point in dollar value. I'm giving you some time. Do this, then I take you to margin of safety. Let's proceed to the next part of the question. That is the B part of the question. We've already done the A part, correct?
Yeah.
And you've solved it. You already know the bifurcation of your fixed cost and variable cost. Now the B
Yes.
part of your question is asking you to find out the margin of safety. What do you mean by margin of safety?
That's the level of output.
Now
That
understand
is
what
it.
do you mean by margin of safety. Suppose your break-even sales. What is break-even sales?
Break-even sales is where you make enough sales to cover up your cost.
Break-even sales is that level of activity where you're making no profit, no loss.
Yeah.
I'm repeating again. Break-even sales is that level of activity where you're making no profit and no loss. Suppose your break-even sales is 250 units. That means if you're
Yeah.
going to sell 250 units, you're going to make no profit, no loss. And your actual sales is 600 units.
Yes.
Actual sales is 600 units and break-even sales is 250 units. That means you are safe by 350 units in the market. You are selling 350 units more than what units you have to sell to recover the cost. So margin of safety tells you that how safe are you in the market. When you are selling 250 units, you are just at the border. You are still not safe. You've just recovered your cost. When you're selling 251 units, that means you are just 1 unit more than your break
Mm.
even. You're not very safe yet. But here, there is a lot of margin. You see,
600 units, yes.
600 unit is your actual sales. 250 is the number of units that you have to sell in order to recover your costs. So what is your margin? How much safe are you? So to find out how much safe are you, you will do actual sales minus the break-even sales. Are you with me?
Yes.
So when they want the margin of safety in which value? They want margin of safety in which value?
Sales.
Sales revenue. The formula for this is, can you write it along with me? When you need
Percent
your
of sales.
margin of safety in sales revenue, the formula for this will be actual sales
Actual sales.
minus the break-even sales.
81 sales.
But in revenue, that means you need it in the pounds.
Yeah.
Do you know your actual sales in pound?
Yeah.
How much?
It's the following from the last one, yeah? 7 billion. 125,000.
7125.
Yeah.
Do you know your break-even sales in pound? Yeah, I'll write it
Mm.
in 000 and 000. You found out the break-even sales as well.
Yes.
What is your break-even sales? In pounds, in the
It's,
sales value. We found out, yeah?
yeah.
5,343,750.
3,000.
5,343,750. So here I'll put the 3 zeros. So your margin of safety will be, you need to put these pounds, huh?
Yeah.
Your margin of safety will be 1,781,250 pounds. You get 1 mark to write the actual sales, 1 mark for the break-even sales, and 1 mark for mentioning the margin of safety in pounds. You see, this is of 3 marks only.
Hmm.
Are you with me?
Oh, okay. Yeah.
Okay. Now you have to find your margin of safety as a percentage of sales.
So you use the difference and you divide it.
Margin of safety as a percentage of sales. This is the formula. I need you to memorize this formula. It is margin of safety in sales value, in sales revenue that you get, divided by your actual sales revenue into
So
100. This will tell you
sales divided.
the percentage, how much percent you are safe in the market.
Hmm.
So margin of safety in sales revenue is how much? We just found out, right?
Actual sales
One
revenue. Yeah.
million seven eighty one
28.
thousand two hundred and fifty. You know your
Yes.
actual sales revenue, that is 7,125,000 into 100.
Hmm.
So you get margin of safety as a percentage of sales. It is how much? 25%. Are you with me?
Yeah.
Okay, fine. Let's go ahead. So we found the margin of safety. We found out the margin of safety as a percentage of sales value. Okay, 1 minute. Huh? Can you
It's
read the
evaluation already. Yeah. Cherry Avocado PLC has decided to award sales staff a pay rise. Sales staff will now receive a sales commission of £8 for every printer sold.
So first they were giving a sales commission of £4.
4.
Now they want to give a commission of £8. And you are how much safe?
Barely.
You are
I
just
mean, 25%.
25% safe. Okay.
Yeah.
So you want to increase your sales and you want to give more commission. If you're giving more commission, you should realize that your expenses, your variable overheads is going to increase.
Yeah.
Okay. Evaluate the decision of Cherry to award sales staff £8 for every printer sold. What is you have to
What?
mention? This is for 6 marks, right?
Hmm.
So
So you
3
have to
marks in favor of the decision and 3 marks against the decision.
Okay.
Okay. Come on, tell.
So one could be that the increase in commission would motivate the sales staff to sell more printers.
The sales staff will be motivated, very good, and the sales revenue will increase.
Yeah, this will increase the sales revenue.
Sales staff
Second
will be
thing,
motivated, this will increase the sales revenue. What else?
uh, what else? Commission.
What I can think is it will increase the revenue and the increased sale would be able to absorb the increased costs.
Yeah,
Staff will be
yeah.
motivated. Increased sale will be able to absorb the increased cost. Now think about statement that is against it. Think and then I will talk.
I'll tell it.
If I'm going to give my sales staff £8 commission, what
Yeah.
is the negative thing that can happen?
Yes, my variable costs will increase, which will affect my
The
profitability.
variable cost will increase. Will increase
Yeah.
by how much you need to quantify.
Okay.
Okay. If your variable cost will increase, then what will happen?
Just your sales, I mean, not sales, your profit will be reduced.
If your variable cost will increase, your profits will reduce.
Yeah.
Okay. Then you will have to sell more units
I don't know, yeah.
to break even.
Yes.
You will have to calculate the revised break even point. You will have to calculate the revised margin of safety.
Uh,
So at present, if I see Cherry Avocado is making $11 profit per printer. Is it making $11 profit per printer? It's given in the question. Their net profit for the year is 825,
yeah.
and they are selling how many units? They are selling
75,000.
75,000 units. So at
Yeah.
present, they are making a net profit of £825, and this is the number of units sold.
That's $11 per
So it will
profit per printer.
become $11 per printer.
Yeah,
Okay,
mister. But
now if we will
that
increase
is
the variable commission, so instead of profit 11, they're going to give more commission.
commission, so your profit will fall.
So this is the commission. So the profit per printer will fall to £7.
Yeah.
Okay.
So if 7
To
points,
increase the profit, you need to sell more.
the margin of safety is
Much
low.
is sufficient. Writing this much is sufficient. I need to write only for 6 marks, right? One I will
Yeah.
write this, one I will write this.
Yeah.
Then I will
But
say
then,
that my sales minus the variable cost gives me contribution.
yes.
Variable cost will increase by another 4.
Yeah.
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 So the contribution per unit will fall down, right? Contribution
Yes.
per unit is 44.
So it will go down 40 now.
So it will go down to 40. So contribution will fall to $40. If contribution is becoming $40, first it was 44. So my break-even point will also change. So the break-even point in units will be fixed cost upon the contribution per unit. Can you tell me the fixed cost that we had?
So it's something.
Here,
2,475,000.
2,475,000. So
Yeah.
2,475,000. The contribution per unit would become 40. So my
40.
new break-even point will be how much? Can you please calculate?
Yeah. This is 61,875.
61,875. And what was the old break-even point?
The old break-even point is 56. It increased.
56,250 units. So by
Yeah.
increasing the variable sales commission, now instead
The break.
first you had to sell 56,250 units to meet the cost. Now you will have to sell more number of units to increase the costs.
Yeah.
How many more number of units you will have to sell?
What?
How many more number of units you will have to sell so that you make break even, you recover all your costs? Initially, your contribution per unit was 44.
Yeah.
Now it is 40. Because the contribution changed, the break-even point changed. First, you had to sell 56,250 units to recover your costs. But now, because you increased your variable cost, you will have to sell 5625 units to recover your costs.
Hmm.
Yes?
Yeah.
Also, your margin of safety will fall down. What is margin of safety?
The margin of safety is 25%.
Minus the break-even sales.
Miss, you put the new one or?
Actual sales, I'm putting the new one, na? No, break-even sales, I'll put the new one.
Yeah, yeah. Sorry, the break. Okay.
Actual sales is 75,000 units, correct?
Actual sales? No, sales are 7,125,000.
No, I'm not talking in dollar value. I'm talking in units.
Oh yeah, that's 75,000.
Break-even sales is
Break even sales was
the new one.
56 to 50.
New
The
one.
new one is 61,875.
So margin of safety will become how much?
1,000 divided by 61.
Minus
It's,
75,000 minus 61,875.
sorry, 13,125.
13,125
125.
multiplied by the sales revenue.
7 million
What is the revenue per unit?
per unit.
95.
95. Times 95 will come up to 1,246,875.
Sorry?
1,246,000.
So 1,246,875. This is your new margin of safety.
Yes, which is very low.
What is your old margin of safety?
Was not something. It was
Here,
7 million. 5,314,000.
this is your old margin of safety.
Yeah.
So first you were more safe.
Yeah, first one was safe. Now it's not safe at all.
Now I'm less safe.
But
So margin of safety will also fall.
miss and the screenshot you have on top.
No,
It
it is going
says
to fall by 534,000.
that is from the actual
This is your old margin of safety when you had less variable costs.
Yeah.
Okay. This is your new
Yeah.
margin of safety based
Yeah.
on your break-even sales.
Oh, okay. Okay. Yeah.
So
Yeah.
your margin of safety is falling by
500.
534,375.
Yeah.
Okay. In this competitive market, it is very difficult to achieve this figure. It is not possible that you absorb the increase of $4 of variable cost.
Mm.
So, what do you think? Whether you should increase or no?
Not increase.
The sales commission.
Yes, not increase. The conclusion would be not to increase.
Okay. However, the success of every company depends upon the competitiveness of their sales staff.
Yeah.
The sales staff they may be able to achieve this target because of the high incentive provided.
Yeah.
So, Cherry Avocado can think of doing increasing the sales, or you could
They may.
alternatively say that they should not increase the sales commission because in this competitive market it is very difficult to sell so many units,
Yeah.
and the sales commission they are giving is sufficient for giving the number of sales.
Yeah.
Okay, so with this I complete
Question 5.
Jan Feb 23, the paper of Jan Feb 23, question number 5. Okay,
Mm.
and this is the advice I want you to write. I want you to show the calculations and then send me the photographs.